Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on Persistent Systems. The company has reported a 2.9% decline in its net profit on a sequential basis for the first quarter, but the figure has largely been in line with the expectations. The multinational technology services company has reported a bottom line of 306 odd crore rupees. We've seen that the revenue of the company has risen by 5.7% quarter on quarter to 2,737 odd crores. EBIT has risen by 2.5% on a quarterly basis to 384 crores, while the EBIT margin has contracted to 14% from about 14.5% in the previous quarter. Now, to detail for us what has worked and what has not in this quarter for the company and what's the outlook going forward, I'm now joined by the top management of the company. Mr. Sandeep Kalra joins in. He's the CEO of Persistent Systems and now he's with us. Warm welcome to you, sir, on Business Today Television, and great to have you with us on this special edition. First up, let's start off by understanding on the earnings itself as far as the margins picture is concerned. Why am I starting with the margins picture is because there is some kind of a confusion amongst analysts who are trying to analyze your earnings. We have seen a dip of 50 basis odd points from the previous quarter, but there seem to be some one-offs in the margins, and some of the analysts do believe that the adjusted margins would perhaps be far lower and maybe below 10%. Is that the right assessment, sir?
So, Sakshi, first of all, thank you for having me. Let me just go over the results first, and then I'll come to your point so that it kind of puts a context to things. So, the Q1 revenue for us came in at $328.2 million. This translates into a sequential growth of 5.6% quarter on quarter and 16% on year basis in dollar terms. And as you rightly said, in rupee terms, the growth for the quarter came in at 17.9% year on year and 5.7% quarter on quarter. This is the 17th sequential quarterly growth for us. And if you look at the margin side of it, the margin side of it came in at 14% in EBIT terms. The last quarter for us was 14.5%. Keep in mind the macro being where it is. It is basically where the work is shifting from larger vendors, smaller vendors to niche vendors like us. And if you look at our revenue growth, it is the leading growth in the sector. Now, when you are winning larger deals, the initial few quarters for the deals tend to be where you are either doing subcontracting to ramp up faster, and in the subsequent quarters that becomes a margin lever for you. And similarly, there are things which are related to our company specific things where there are certain acquisitions which came to the end of their earnout period and there are adjustments related to that. So from an overall perspective, we are confident where the EBIT is, and we had clearly called out in the last earning call as well that the EBIT for the year, our aspiration is to keep the EBIT at the same level as the last year, while we will grow at industry leading growth rate. So we are sticking to that, and we clearly believe we will land up good growth, good margins, and set the run rate for our margins to improve over the next 2 to 3 years.
What are the levers that you would have, sir, for margins upgrade from the current levels?
Sure. So if you look at our subcontractor cost, the subcontractor cost went up in this quarter by about 2.1%. Now, that is on the back of some of the larger deals that I pointed out, which include vendor consolidation, some of whom we are subcontracting for next, several quarters, and they will come down. There was an H1B filing that we did, which was basically a one-time event in the quarter. And there is, other things like when we improve utilization and when we are letting go of undeployable bench, there are severances, etc., that we pay. So there are a multitude of those which will lead to operational efficiency and which will also be margin accretive for us. So we are fairly confident of the margin where it is to where we want it to be.
Okay. I also wanted to understand from you, Mr. Kalra, how are you looking at the demand scenario playing out vis-a-vis a couple of quarters? Are you seeing some green shoots emerge as far as the demand conditions are concerned? There has been the entire industry-wide tough conditions that you have all faced, but is there, light at the end of the tunnel? Are things looking upwards?
Yeah, so overall, if you look at the demand environment, so far it is in line with the last several quarters. There is a hope that is building up in terms of September onwards rate cuts in the US, and that should spark off rate cuts globally. That is the hope and expectation, and so there is a little positivity in the discussions. Nothing to report in terms of that contributing to order wins. For us, our investments in Gen AI, building a platform called SASVA that we are using to deliver more productivity and hence winning more larger deals using that is where we are winning against the market. We have won several deals against mid-tier and larger peers. So it is basically for us, the phenomena is about using our IP, using our investments in platform, etc., to drive productivity, give better value to our, customers, and a number of proactive wins. So I would say demand environment remains same. It is our efforts which are yielding the results, and over the next several quarters, we do believe things should ease on up.
Okay. Also, sir, if you could detail for us segment-wise performance, how has it been in this quarter, and geographical performance for you? Where do you see leading growth from here on for the rest of FY25 to be coming in for?
Sure. So if you look at the first quarter, healthcare, life sciences, and BFSI industry verticals grew by 16.3% and 5.8% sequentially. Software high tech was real about minus 0.4%. That is where the first quarter came in. In terms of the order wins and the perspective that we see based on the order wins, we believe healthcare will lead the growth. BFSI will follow, and software high tech will also turn positive in terms of growth. So we are seeing a secular growth across our segments. In terms of geographies, if you look at it, North America grew by about 18.2% year on year. India grew by 15.7% year on year. These were the two major growth year on year. In terms of quarter on quarter, North America grew by a healthy 6.28%, Europe by 5.7%, India by 2.97%. Those are the three growth areas for us on a quarter on quarter basis.
Okay. Also, sir, on the deal wins and the pipeline going forward from here on, how do things really look like? Your order booking for the end of June quarter is at $462.8 million dollars, and the total contract value is at the $337.3 million dollars in the annual contract value as well. Could you detail for us the order wins that you saw in this quarter, and how does the pipeline look?
Yeah. So you have fairly well called out. The total contract value of the orders that we won were 462.8 million. The good part is the new bookings are $310.8 million out of this in terms of total contract value. In terms of the realizable value over the next 12 months from this, the annual contract fully is about 337.3. About 198.1 million. All of this bodes very well for us in terms of revenue conversion and continued growth. In terms of the pipeline is healthy. Obviously, we'll let the quarters pan by and report as we report the next quarter results. But overall, things look healthy both from a order book to revenue conversion and a continued growth perspective.
Okay. So you've also announced that you've pivoted to an AI-led platform-driven services approach, deepening the hyperscaler partnerships, going forward from here. Could you help us understand how is this going to augur well for the growth on the top line for you for the rest of FY25?
Sure. So over the last 18 months, as generative AI has become more and more pervasive, we have been looking at pivoting Persistent to infuse AI and generative AI in all our service lines and the services that we deliver to the market. We are looking at it in two parts: AI for tech companies and AI for enterprises. When we look at AI for tech companies, what it means is if somebody is doing product development, how can you use modern development tools, not just to do individual productivity enhancement for a developer, but how can you deliver an end-to-end product more effectively, faster, better, cheaper, using a platform which basically makes it easier for and increases the productivity across the life cycle. Second part is where we are looking at AI for enterprises, where there are things like reporting tools that can be consolidated to open source tools, things like technology migration from legacy technologies to more open technologies, and so on and so forth, forward looking technologies. So from our perspective, one of the things we have done very well in the last 18 months is invested in building a platform using which our engineers should become more productive and customers will get more value. Over the years, we expect this to translate into higher revenue per employee, that would translate into higher profitability per employee over a period of time. So that's the investment that we have done, and we have always believed in investing in technology ahead of the curve, and margins definitely will follow. If we do all of this right, not only will we gain market share, but we will also gain profit share from the industry.
Okay. So, right now, the contribution of your top 10 clients as a percentage of the total revenue has gone up to now 41.5%. How do you see this growing? And would it be a plus to see this figure increasing going forward? Or is there going to be a risk?
So look, top 10 customers in a company like ours is not necessarily static. So there are wins that we do as we are growing bigger. Look, 5 years back we used to be $500 million in revenue. Today we are touching $1.2 billion in revenue. The bids that we are getting invited to today, 5 years back a customer would not have invited to. those bids because the risk profile would have been different. So the size of bids, the kind of customers we are dealing with, the kind of competition we are dealing with has significantly changed for Persistent. And so we believe for top 10 customers to be in this range is fairly healthy. Now, within that, there will be customer movements, customers coming in at scale, and there may be some customers that may move out of this category. And this will all be relative to the revenue size of Persistent. So maybe 2, 3 years from now, Persistent will be $2 billion and top 10 customers profile may look different. We are very comfortable where it is and happy with where it is.
Right. So, like you pointed out, you've already set a target of becoming a $2 billion company in the next 2 to 3 years perspective, and you reiterated that. I wanted to understand, what will be the key growth drivers that will pull you to that target, sir?
Right. So if you look at it, we talked about a few of those already. So winning larger deals in customers that matter, who have a propensity to scale with a company like ours. And there's a significant fatigue from tier one providers where they are not able to bring new technology at scale ahead of the curve. And that's where our aspiration would be number one, larger customers, larger deals. Number two, platform centric approach, where we are using our technology chops to bring more value to our customers and operating efficiently ourselves. So if we are able to use platform centric approach, we will disrupt our own revenues and will disrupt the other peers in the industry and have use cases that can scale. Number three, inorganic, where we will bring in horizontal to vertical use cases on AI, Gen AI, and other technologies, where we see the forward looking puck going in terms of growth and more value to the customers. So we are fairly confident on our execution rigor. This is the 17th straight quarter of revenue increase for us. And if we do the things the way we have done and better, I'm pretty sure we'll reach that goal within the next 2 to 3 years.
Next 2 to 3 years. All right. On that note, thank you so much, Mr. Kalra, for detailing for us the earnings insights and the outlook also going forward. I wish you all the very best for the upcoming quarters, and we will see you very soon in the next quarter to help our viewers really understand which way is the company really going to be growing forward and the vision of the company. Thank you so much.
Thank you.
All right, viewers, we will wrap it up at that. This special conversation with Persistent Systems top management. You heard from the management what worked and what is going to be as the top most priority area for the company really look forward to from here on to reach that $2 billion target as far as the company is set for itself in the next 2 to 3 years. And they're fairly confident of the strategies that they are implementing that would ultimately result in higher growth. The stock prices, although softer today, they've already been in a sharp upward one-way rally on a year-to-date basis. In the 1 month perspective, if you look at it, the stock has really performed quite a lot. We'll wrap it up at that, but do stay tuned as action continues on your screens on the other side on budget and on earnings as well.